Pullback for stocks could continue. I'll show this on a 4-hour chart and the specific levels to watch. We just witnessed two Treasury interventions, one to save the falling yen and another one to save the spike in interest rates. And so far this interest rate one appears to be short-lived. We're seeing right now quite broad selling in utilities, and this kind of worries me and could actually signal a deeper pullback in a few months to come, in the weeks and months to come. On a bright note, I'll show you how to trade more volatile stocks, and a good example from recent history is Moderna. So we'll look at that. Dollar is showing signs of stabilization, and gold miners are way overbought currently. So I think a pullback for gold and gold miners is quite likely, unless maybe dollar doesn't stabilize, which is also possible. And Bitcoin broke out as I was predicting and is approaching bull market for itself. All this and more in today's edition of MasterChartsTrading.com. Market recap for Friday, August 21st, 2026. As always, like, share and make a comment on this video. Even put a thumbs up into the comment section. This is what keeps the channel going and helps promote this channel to other viewers. Again, thank you for all the comments I've been getting. If you're a subscriber, stay tuned. We'll be covering various securities as well as especially market breads, some of the ETFs, large cap stocks, and some of the speculative securities in the members only section. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com and signing up there. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart, this green, blue, red, and yellow line. One more thing I'd like to ask before I forget: if you have already an account with TradingView.com, so TradingView.com, go to this link. I will leave the link in the description, and boost my script, this rocket thing right here. So this 2.0 indicators, please boost it. It's a public script that needs my approval, and if you guys boost it, I will finally be able to offer it throughout the actual TradingView directly, without this convoluted scheme where you have to first get a TradingView account, then go to my site, MasterCharts Trading, sign up there, and then I'll open the door for you on TradingView.com. So please boost my script. Again, I'll leave the link in the description. All right, now that we got the housekeeping out of the way, let's get started. So S&P 500, first on the agenda. So not really much you can see on this chart. It's, we recently hit records. We're pulling back a little bit. It's a very, very minor pullback so far. So let's look at the 4-hour chart. This is a 4-hour chart. So each candlestick is 4 hours worth of activities. And this is S&P 500 futures. So these are the all-time highs that were set on August 13th, last Thursday. Since then we've been sort of pulling back. You can see we sort of pulled back below the green line, tried to rally above it, again failed. Now we're coming down towards the blue support resistance line, which is around 7,600. I think this is a very likely target, and we will at the very least touch that level. Another level to watch here is about 7,500, which is a unfilled gap. Also a possibility, but this gap is quite small, and more likely support will hold here at the blue support resistance line. So we'll be watching around 7,600 for support, and you can see the same levels on the daily chart. So about 7,600 would be the green support resistance line. And notice that this green support resistance line has acted as support on at least 3 occasions here that I can see on this chart. To a lesser degree, it acted here as well back in March, but it kind of fell through it a little lower. So overall, I think this is the level to watch for this support. As you can probably, you heard probably from recent news, Treasury Department, Scott Bessent, intervened in the Treasury bonds, especially the longer dated ones, and the longer dated Treasury bond yield fell from a 19-year high of about 5.33%. It's set right there on Thursday, the 18th of August, 2026 this year, and we fell as much as to 5.19% or so. But notice that this has been pretty much short-lived, and we have rallied again towards about 5.26 level. So this was a very minor event. Unless he's prepared to continue, buying longer dated Treasury bonds, this will probably be a minor thing. If he is indeed prepared to continue buying Treasury bonds, then the action in gold and Bitcoin actually is very understandable, and dollar as well. Dollar dropped, Bitcoin and gold and silver rallied pretty strongly. So this is indeed the definition of how you can stoke inflation. And basically they're, creating money out of thin air and then buying Treasury bonds. So in essence, I'm sure I am, simplifying this, and I'm sure it's very complicated, and people in suits, they have the control over that. But I think if I am trusting the markets, and I'm trusting the markets more than I'm trusting the officials, I'm seeing suddenly Bitcoin rally like there is no tomorrow, and gold miners are doing the same thing on this specific news of Treasury Department, committing to buying longer dated Treasury bonds and Treasury bonds in general. So keeping lower interest rates is important for Treasury. At the same time, the Federal Reserve is saying that they actually want to raise interest rates because of the inflation concerns. So go figure there. But for the time being, we're watching this pretty closely, and one of the victims of this recent intervention, yet another intervention, is of course utilities. Utilities have finally started to feel this, although I think utilities actually started feeling this even earlier. We can look at the longer chart. So this is an all-time high set by utilities right there on April of this year, and since then we did not have any more record highs versus, for example, S&P 500, which indeed set new record highs. So this is a negative divergence, and it's not a great thing to have. Utilities, some people, some famous traders, I read at least in some of the books, they actually look at utilities quite closely, and they say that if utilities are not leading, then we are indeed entering a troublesome territory. So we are indeed seeing this with utilities now in caution phase when they dropped below this red line. So my lines actually act also as indicators of state of being of the market. So for example, if we close below the red line for any particular stock or fund, we're in caution phase. So this is a caution phase. Now this is a XLU, which is capitalization based utilities, but we can also look at equal weight utilities, and the ticker symbol is RSPU. Granted, this thing is very thinly traded. It's only 113,000 versus 22 million shares for the XLU. Nevertheless, we're seeing identical pattern for this fund. Also, the records were set in April, and since then no new records, and now we're seeing a a new low, not a 52-week low yet, but definitely a low for this time period. So this is broad-based utility selling, and I think this has to do with interest rates going to 19-year highs, especially the longer dated ones. The reason being is because utilities do borrow money to finance various energy generating projects, and the higher the interest rates, the more money they have to pay to borrow the money. The higher the interest they have to pay to borrow the money. So investors are seeing this. Investors are seeing selling utilities as a result. So honestly, not a great sign, and I am more concerned about this than anything else in the market right now. I'm actually very concerned, as they say, like for example, some of those people in power, especially in Europe, when the Russia invaded Ukraine, the European Commission said that they were very concerned, or gravely concerned, or deeply concerned. So I am deeply, gravely, very concerned about this utilities action, especially this XLU, which is a bigger deal because now we're technically in a caution phase, a very quick trip to down to the yellow line would imply an outright bear market. So right now we have XLU utilities and then XLC, which is communication services. Communication services was an outright bear market, granted because of the weight of Meta platforms or Facebook in this ETF, but it is definitely, technically speaking, again in a bear market. So we have one major sector in a bear market and one gravely concerning one. So let me know what you guys think. Am I overthinking this? Is there really any basis to what I'm saying? Make a comment in the comment section. Okay, now some of the I had a subscriber ask about Moderna. Unfortunately, I was not trading it at the time, and when the news hit, I was looking at the chart afterwards, and I said, okay, well, if I had my, if I was trading Moderna, if I was following it, then on this chart you can clearly see what the pattern is. So number one, nobody cared about Moderna around November of last year, and only right there where I'm hovering on, specifically on 13th of January 2026 of this year, suddenly it broke out above this blue support resistance line. And basically you can at this point buy pretty much any pullback towards the blue support resistance line. So breakout, pullback, new high, pullback, new high, pullback, yet another new high, another pullback. So we're buying basically on close above the blue line after it touches the blue support resistance line. And technically speaking, if you had my indicators right there where I'm hovering on August 12th of this year, just a few days back, you had a signal and you had up to 4 days to buy. So up to August 18th. And then the news hit that Merck and Moderna have positive results with a melanoma, basically it's like a vaccine, it's like RNA, what I understand is an RNA RNA-based vaccine to treat melanoma, which is very, very promising. So if you had my indicators, yes, you could have easily traded it, and it's pretty obvious from this chart how to do that, because all you do is just buy it on close above the blue line. You don't really need to know the news. Obviously, I didn't know the news, and you didn't need to know the news because you had actually several days to buy it, and news hit and boom, you're plus 174%. So if you did that, congratulations. If you haven't yet done so, go to MasterChartsTrading.com and sign up for my indicators. Again, don't forget to boost my script. As I said, I will leave the I will leave the link in the description, so boost my script, please. Alright, so that's mRNA. Alright, let's switch gears. We're currently looking at euro versus US dollar. So up until very recently, notice the downward facing arrows. These are all bearish trades that you could have taken. Now the latest opportunity, or rather now we're seeing a move the opposite direction for euro versus US dollar. In other words, we're seeing euro gain and approach the blue line, which would imply a bull market for euro. So not yet, but we're kind of getting there. Although these two candlesticks from yesterday and today seem like there is resistance, seem like they're showing resistance up around this area of 1.17. If we look at the dollar actually broke down, and I was saying this, on multiple occasions, that this type of drop, where I'm hovering from 29th and 30th of July, it doesn't just disappear. Usually it gets duplicated on the downside. So I think we're seeing the first leg of that duplication. If it continues, we will definitely get to the red support resistance line, which would imply a bear market for the dollar. Now, some securities are already acting on this potential, and gold has indeed rallied pretty hard, from the recent lows that we set around June of this year at around about 4,000 or so. Now we're about 4,600. So pretty nice big rally. Technically speaking, we're still in a bear market because we have closed below the red support resistance line. So I want to see a close above the blue line, and then at that point I will no longer worry about gold being in a bear market. By extension, dollar would probably by then close below the red line. Gold miners moved a lot more. So from the low on the 17th to the recent price, it was almost 50% move. So gold miners are actually already technically in an uptrend, because notice that we just broke above this blue support resistance line. So at this point, there is at least some indication that gold and gold miners are no longer in a downtrend, but rather are now in an uptrend. So we will see again, the dollar is what's it all about. Dollar needs to break below the red line around 97.8, and then at that point we'll say, okay, no more uptrend for the dollar. Of course, the biggest news of the week was the Bitcoin. Now, if you go back to my videos from like late June, I was already saying that there's a very good chance that we're going to at least rally some. I just didn't know how quick and how sharp this rally was going to be. So this is an announcement by Scott Bessent. And notice there's three huge green candlesticks. So we are definitely now approaching the bull market for Bitcoin. Bitcoin bull market is just a little bit higher at 82,800. We're only 6% away from a new bull market in Bitcoin. And, bull markets in Bitcoin have been something where notice what I'm doing here. We're again buying on close above the blue line. So sometimes those moves were tremendous. Like, for example, there is one that went from Bitcoin doubled from about 60,000 to about 120,000. So yes, absolutely, bull market for Bitcoin could be very good news, because this thing sometimes move very quickly. Head over to MasterChartsTrading.com, click on sign up for one of the products, So I have trading indicators and newsletters. So again, trading indicators are these lines on the chart, this green, blue, red, and yellow lines. And you will be able to see the same lines on your chart once you open a free TradingView account. Head over again to my site, MasterChartsTrading, and once you sign up, I will open the door for you on TradingView.com. To help me get a place listed, my indicator is listed on the marketplace for TradingView.com. Please boost my script. Again, I'm going to leave the link in the description. If you don't need the indicators, you just want my newsletter, I send out daily alerts and weekly members only videos. So again, all of these various securities will be covering in the weekly members only video that will come out in a few minutes. Both indicators and newsletters are available as a bundle, and at the yearly price it's a steal because you get 2 months free compared to the monthly subscription. Let me know if you have any questions. Thank you for watching and have another great trading week. Bye-bye.